Welcome everybody to the World Institute on Disabilities Equity video series. I'm Kat.
And I'm Tom.
Okay, so today we're going to talk about real estate or home ownership, I guess. Tom, you've been talking about how home ownership is a great asset building opportunity for a long time. Can you tell me more about that?
Absolutely. So one of the things that we know, particularly here in the United States, is that 50% of middle class wealth in this country comes from home ownership. It's sort of a long tested way that folks can move into the middle class and build some financial security through home ownership. Houses maybe don't appreciate quickly, the market goes up and down, but home ownership is a way that people have been able to build wealth in this country for generations. In addition to that, we've been looking at a bunch of research, and this might really surprise you, but over time, it turns out that rents generally go up.
Wait a minute, you needed to do research to learn that?
Yeah, well, So, but it's just common sense, right? Think about it. So was your rent more or less 5 years ago?
It was less.
Okay, and in 5 years, do you think it'll be more or less?
Duh, it'll be more.
Right, so, one of the things that we always like to talk about around home ownership is, you need to get a mortgage to buy a house. And, most people know that. That's a loan that you get from a bank or some other financial institution. And there are different types of loans, but we always recommend that you get a 30-year fixed rate mortgage because it's a fixed rate, and so your mortgage payment won't change from year to year. So for example, interest rates are at historic lows right now. So if you look at, say, a $200,000 mortgage, right now that costs about $1,000 a month. But that $1,000 a month will never change. So in year one, your monthly mortgage payment would be?
$1,000.
In year 5?
$1,000.
In year 25?
$1,000.
Okay, I'm gonna get her now. What about year 31?
My loan's paid off.
Right, so that's the other thing, right? Rent goes on forever. But with a mortgage, particularly a 30-year fixed rate mortgage, once you pay it off, you'll own that house free and clear. We did some math based on historical returns of real estate in the United States. That $200,000 mortgage at the end of that 30 years will be worth $492,000 that somebody might own free and clear. And that is a really nice asset on which people can depend.
Well, I'm sold. So what are my next steps?
Fabulous. So check out our home ownership issue of equity. It has lots of great information about home buying and different programs that folks with disabilities and other low-income folks might qualify for. So for example, FHA has a special mortgage where you only need a 3.5% down payment and you don't have to have perfect credit, which is really cool. There's even a program for veterans where you don't need any down payment at all. There's a thing called a 208 mortgage where you can borrow more than the purchase price of the house so that if you need to make special modifications like build a ramp or modify the kitchen for accessibility purposes, you can do that. Lots of great information in this issue of equity. So check it out, make a plan, and go buy a house.
Thanks, Tom. This has been the World Institute on Disabilities Equity video series.